Yo, we are back for another episode of Ask Someone Else on a Sunday. Now, you already know it's not Sunday, but we missed one, but we couldn't keep you waiting, so we had to come back with another episode. Am I here? Can you hear me live? I hope you can. So we are back for another episode, like I just said, of Ask Someone Else. We normally hit each and every Sunday, but it's not Sunday because we missed one, but we couldn't let you miss it, so we had to come back and do it on what day is it today? Tuesday. So today I'm going to be joined by an A1 deal sourcer, because right now one of the most common questions I get asked is, you can tell hay fever is kicking my ass today, but I'm here regardless. Yeah, one of the most common questions I get asked is, how do you find a deal, in this market? A lot of people have been struggling, a lot of people have been saying it's not possible, but I've also been seeing a lot be viable. So the reason we're here and the reason we do these lives is to give you the opportunity to ask an industry expert or to somebody in a specific niche a question that you want the answers to. And that is, today that is going to be, how do you find a deal? So I'm still finding deals. Actually had some really good news. I think we need I don't know what emoji you want to use, but recently, so Friday 17th, just got planning on a conversion. So that's a single residential dwelling to convert it into 4 flats. Purchase price was 525,000, and the GDV, the gross development value, conservatively is about 1.45 million. Nathan's unable to join. I think it's because he hasn't updated his latest version of Instagram. So Nathan, if you haven't, make sure you update Instagram and it will allow you to join. So yeah, we got planning on that. So that's definitely an example of a deal. Let's have a look at some questions before Nathan is able to join. What is your best advice to find a property to do buy to let and then rent it out as serviced accommodation? So a few things. Serviced accommodation is a really weird area. It's really popular. Loads of people do it. But in terms of specific mortgage products, it's really actually hard to find a product that works for serviced accommodation. A lot of buy-to-lets want your conventional long-term tenants, and they're not really made for short-term serviced accommodation or short-lets, as they're often known in the industry. So you need to make sure that your mortgage does allow you to do SAs. For me, I'm not a massive fan of them in terms of, not that I don't think they're good, I just haven't done them that often. They weren't maybe matched to my skill set. But if you are doing them, I would say a few key things. Make sure they're in an area where you can see the demand for the product you're using. So i.e., when I was doing them, I was focusing on high-end areas like Zone 1, or areas like around transport links like airport stations, etc., and just make sure that it's going to be fit for purpose. Let's see if we can get Nathan in now. Has he updated? Has he paid his phone bill? Are we going to let him in? Is he going to work? Let's have a go. Nathan, Cameron. I'm going to send you another invite now to see if we can get you in. You're here-ish. You're here. The connection has improved. I was telling the people you haven't paid your phone bill, but clearly you have. Got you in. You're looking shiny.
The sun is here. The sun is here. How you doing?
I'm good, thank you, brother. I'm good. I said hay fever is absolutely kicking my ass, but apart from that,
that's good. That's good. Thanks for having me on here. It's good.
You're welcome. I just mentioned we just got planning on a site in Croydon, so just got
nice.
4 flats, which is good. Got that on Friday, so we're
excited build it?
about that. Yeah, you know me. I love to really and truly look at it this way. I could something with a build cost of about £380,000. Yeah. GDV of 1.5 million. How much could I sell that for? How much would you sell that for?
4 flats typically, they're going for around 600k. With planning.
What, with planning?
Yeah.
That's what I'm saying. So, but if I said, okay, I bought it for only like 525, so I'm looking at, after costs, maybe 50,000 if I'm lucky profit. if I build out, there's about
Yeah,
four
it's
hundred
good. Yeah,
thousand
yeah,
profit in it.
yeah, yeah. You have to build it.
So yeah, I mean,
Yeah,
you
yeah,
have
yeah.
to build that really. But so what you're selling, so if I offered you, so if you get me a site
Mm.
with 4 flats and I offer you 650, the deal
If I
across the
get you a
line.
site with 4 flats,
Yeah, and you're saying you want 600, I'll give you
are
650 for it
we talking
tomorrow.
about a new build scheme though? Yeah,
No,
that's
that's
different
not a
then.
new
If
build,
it's
that's a
not a new build,
conversion.
then it'll be a lot higher than that. You probably will get a lot more than that. Like the one that we had in
Yeah,
Whiteley, it was
yeah, that's what I
that
thought.
was 3 flats, and you know the
Yeah,
prices on that.
yeah. I did. I got outbidded for it, didn't I? So, Nathan, for those that aren't as familiar with you, can you let the people know what it is you do?
Yeah,
Provide
so
value basically.
I'm a commercial and development consultant. So my job is to sell land and development sites, as well as commercial buildings. So I'll sell anything from an office block to a pub to a church to land with planning, land without planning, warehouses, anything that is commercial. So the only thing that I wouldn't sell is a traditional flat, new build flat or new build house, but I will block sell investment properties or um, any form of commercial property, basically. That's my job.
So, and so obviously the title today is kind of how to
Mm.
find a deal. A lot of people are looking for, they hear different words, obviously, you sound it differently, but in terms of people, they're effectively able to source them development opportunities
Mm.
or investment opportunities. Um, how does somebody best go about working with you, like to make sure that you don't
Working
waste
with
each
me,
other's time?
so that's a big question. I think let's talk about how your style, like your style is you're good with numbers, right? So when you approach when I
Yeah.
speak to someone like yourself, I have an understanding that you understand what you're doing. So the first thing to do is understand what you're doing,
Mm,
because there's no point in trying to get
okay.
land and then as soon as the land comes up, you don't know what to do with it, and then you end up losing money. So the first thing is build your knowledge,
Mm,
understand how to buy these sites and how to build them. The second thing is, if they're going to approach me, is have a specific criteria that you're working towards. So, like, if you've got
mm,
300K in the bank, don't think that you're going to buy a 100 unit scheme in Croydon. Like, it just doesn't make sense.
mm,
A lot of people will have, I wouldn't say a pipe dream, but they have big aspirations, but they're just not there yet. And if you're starting out,
mm.
then just start out with 1 or 2 units, start out with just a small conversion, do something simple to get your name out there but also get your experience up. And then the final thing is, once you have your power team in place, which includes like your accountant, your legal team, who you know and trust and basically have spent a bit of money with them already or have recommendations about them. Have your finance in place. If you're getting finance, have a broker. Just have it all ready, because by the time you come to me, there'll be someone else with cash in the bank who will just do it quickly. So if you're not ready, then I'll just
Yeah.
sell it to whoever's ready to do the deal.
Okay. So when it comes, so that's so basically when somebody comes to wanting to work with whether it be like a land broker or a sourcer, effectively how
Mm.
they position themselves and their preparation is really important when you decide whether or not you're going to work with them and the likelihood that you're going to be able to do deals with them
100%.
effectively is what you're
And
saying.
and that goes for anyone, whether you're speaking to a land broker like myself or whether you're speaking to an owner direct. You need to be in a position to actually buy. It's like going into a Gucci store and you've got £100 in your bank account, but everything in there is £200 plus. Like,
So you're like Gucci. That's what I'm telling the people. You're like Gucci. You're like
I'm
Gucci.
not saying that. I'm not
That's what
saying
you're
that
telling
at
them.
all. I'm just saying, like, you're going into a store. Even if you went into Primark with no money, how are you going to buy anything? Do you see what I mean? Um,
You're saying because particularly in a market
mm,
buoyant the way it is now, if you are out here looking, you don't want to be offering on things and then somebody says yes and then you're having to work out
100%.
retrospectively how you're going to do it.
100%.
Okay. And what's it like, you know, for people in this market? How are you finding it with people that want to put offers forward, whether it's as options or subject to planning? How are they being
Options and
received?
subjects, the market's changed massively, I'd say, over the last 2 years when it comes to options and subject to planning deals. I've noticed that vendors, so people selling the land or commercial buildings, are a lot more well versed, or they, especially in London, have been approached before. So what's happening is when you approach them and start speaking to them, they're like, oh yeah, I want X amount already, and they have a figure in their head, and a lot of the time that aspiration might be a little bit too much. Um, so it's becoming a little bit harder, and also these vendors don't want to wait for option agreement or subject to planning deal. They just want their money now. The reason why they're
Yeah,
selling may influence how quickly they need that money. And if they are willing to wait for a subject to planning deal, typically they want planning gain money. So
yeah,
you understand what I mean, but for everyone else, um,
yeah,
when you're buying subject to planning permission, you're basically getting a piece of paper and signing it with the owner and basically saying, I'm going to buy this property anytime in the next 18 months to 2 years, um, subject to me getting planning permission. Or whether I get planning permission or not, I might be able to flip it on. I'm just going to buy this property at this specific price. Now, what's happening is,
yeah,
let's say, for example, the price that you agree is £1 million, and that's what the owners want. Once you've got the planning permission, typically you're increasing the value of the site. But what's happening is the owners are like, well, if you're going to sell the site for 1.2 million, for example, I want 1.2 million now, or I want 1.15. And then for someone like yourself, Kazi, coming in, you're in a position where if you don't get what you're intending to get, you're heavily at risk. And then you might end up not making money on the site and spending a lot of money on planning permission and then not being able to make a profit at the end. Um,
yeah. I guess, and I think, was it the ordinary landlord just touched on it? You know, it's effectively trying to find that balance between, particularly where the vendor is well versed in terms of what it's worth now versus what it will be worth in a year's time, subject to achieving the planning. Uh, a happy medium between the two, i.e., an increased payment for taking a risk and delaying, you know, their remuneration for their asset, but also to bear in mind they don't get all of that money because it's the developer who's going ahead, who's taking the risk to invest in the planning, and depending on the size of the application, that could be in 5/6 figure
of course,
numbers depending on the size of the project. So I think, you know, both of those things need to find a happy balance. And I guess that's where people like you come on board to help manage everybody's expectations to get the
100%,
deal across the line.
100%. And typically, anyone that's doing a subject to planning deal, from the vendor's perspective, they are typically someone who doesn't know how to get the planning themselves, and with or don't have the time to get
Yeah.
the planning themselves or resources to get the planning themselves. So for some people it's an emotional experience that you have to manage. Me as a broker, I have to manage emotions more than anything, managing people's expectations, helping them to understand exactly the process. So from a developer's point of view, as long as you're accommodating to their feelings and how they feel and how the experience and the process is a little bit out of the ordinary, you're more likely to get a deal done.
Yeah. And I think the thing is, obviously, you know, when we talk about how do you
Mm.
find a deal in this current market, there's a lot of people, you know, whether it's open market, whether it's auctions, whether it's direct to vendor, whether it's, you know, dealing with sources or land buyers. And I think it just really depends on
Mm.
circumstance of your current skill set. But there's always of each one. And I think one thing that you just touched on, or we touched on together, was that, you know, having a middleman effectively sometimes helps to grease the wheels of the deal, so to speak, helps it get across. It's not my what
Mm-hmm.
I want versus what you want. There's a mediator, somebody to
Yeah.
mitigate any potential disputes in the middle, which what I found some deals that, you know, I've
Mm-hmm.
tried to buy direct to vendor
Yeah.
have fallen apart, and I've actually found someone myself who's offered me the same deal,
Yeah. Yeah.
even
Yeah.
maybe at a price down the line, but they negotiate and have that conversation and explain why, because you're not buying it. You're
Yeah,
saying, look, I've spoke to 10 people,
exactly.
none of them will pay. So they take. So I think it's another reason why people, if you haven't already, make sure you give Nathan a follow, connect with him. If you are looking for deals in that sort of Southeast London area, and you've got your in a row. I think we've got a question from somebody. Mr. Pay Your Bills, please. Hope you have paid your bills. How are vendors' attitudes towards overage payments?
So when you say overage payments, are you talking about, wait, yeah, when you say overage payments, are you talking about you've negotiated a deal and then you're saying, oh, I'll give an overage later on, or?
Yeah, well, I'm going
Yeah,
to make an assumption that it could be wrong and correct me, but you know, an overage effectively like, so, okay, I pay this now, and depending
yeah,
on the success of the deal, you pay this on the back end. So it can either be back end of
yeah.
profits, back end of GDV.
I've had a few deals recently with overage payments, but it's the vendors that want the overage payment, and they've heard it like in the pub. It's not like they know anything about property. They're like, I've heard about this thing, like overages. So can I get that? I'm like, okay, I'll negotiate that for you. So with the overages, the vendors are the people that are putting it in place, typically. If the vendors are not putting it in place, then if it's the developer saying, I'll give you a payment later on, typically they're not too amenable to that. From my experience, probably in the last 6 months. So I've got at least 2 deals under offer at the moment, both with overage payments, but it was the vendors that wanted the overage.
Okay, I don't know what's happened. I don't know if it's just me. I don't know if
Can you hear
everybody
me?
else can still hear Nathan. We'll see. You've gone a little bit. I can hear you, but your connection's gone a little bit Matrix-esque. I'm not sure if it's mine, but you're a little bit blurred, or very blurred. You look like you're hiding. Can you hear me? Can anybody else hear Nathan? Can we just check? Can we get confirmation? Anybody in the chat? I don't ever know what the delay is like. Can you hear me though? Or is it both of us that are gone? Both of us? It's always crazy. I've got to wait for the delay. So I have to just entertain myself. I feel like I'm just here and Nathan will be back very shortly. But yeah, anyway, Nathan will be back very soon. Oh, he's coming back. He's coming back. He's coming back. We've also got Io. Io the QS in the building. Io is going to come on this very, very soon.
Yeah. Can you hear me now?
How are you?
Good,
We can. Okay. So yeah, you were touching on overage and saying effectively a lot of people that protect, because it is something I'm hearing more commonly, yeah. But maybe people don't necessarily understand exactly how they can potentially work. I think like the concept of a option agreement or subject to planning, it just has to make sense for both parties. So, i.e., if you're going to ask for an overage, are you going to take a massive discount off the purchase price? And if you want a percentage of the GDV, you know, all my hard work, effectively, are you going to make it worth my while? So I save enough money day one.
So like the overage I've got in place, I can give high level numbers of what the deals are. So I've got one in Southeast London, which we've agreed at 1.65 mil, and with that deal, the owners wanted an overage, and that specific overage is a little bit different because it's based on a price per square meter or price per square foot. So his intention is to get a certain amount of units, which will be under, let's say, for example, 10,000 square feet, and then any if he achieves anything more than 10,000 square feet, then the vendors will receive an overage payment. So it'll be like £20 per square foot. And doing it that way.
I guess that makes sense because it's a lot more tangible. We don't need to do open book accounting like you would need to do with profit share percentages at the end. I think also, like, from a cheeky developer perspective, sometimes obviously I say, subject to planning on the basis of like,
Mm.
you know, a 4 unit scheme, because they will accept the offer that it makes sense, but it might realistically only make sense on a
Mm.
7 unit scheme. But then, you know, balance where, because that's the thing, everybody, if when the pie gets bigger,
Yeah,
everybody
yeah,
wants a
yeah.
bigger piece.
Pretty much. So the reason why they did the square footage is because if you're going for, let's say, for example, a 10 unit scheme, you're not going to have more than 10,000 square foot. So anything above there, you've obviously done
Yeah.
something out of the ordinary, and therefore the owners would want a payment for that. Yeah.
Okay. I mean, I think that's the thing, is it depends on, you can negotiate anything as long as it makes sense for
Mm,
both parties.
literally.
Like, you can negotiate dollars,
Mhm.
negotiate to pay in crypto, you can negotiate you can negotiate to pay on a direct debit over term,
Mhm.
as long as it makes sense for the owner and the buyer. So the next question was deal finding with residential projects. They said they're regularly getting overbid by owner occupiers. Would you say with a commercial is more chance of traders and developer opportunities? So would you say there's more opportunities in the commercial space at the moment than the
Uh,
residential?
would I say there's more I think I don't operate in the residential market to comment too much, but what I would say is what he's
Well, it's still, they're still talking about residential properties that have the opportunity for
uh,
development, or you don't really
I
operate.
think so. So to touch on the owner occupiers, there is a bigger demand for owner
Yeah,
occupiers at the moment, and people developers are getting outbid by owner occupiers. Even when I'm looking and appraising a site,
yeah,
2 years ago, I'll be looking at it as a development opportunity. Developers are going to pay the most money, but now it's more likely that owner occupier would. So, like the one that we went to see that in Croydon, that the bit at the front that went to an owner occupier, a developer would have paid 450, but the owner occupier paid 525. So that's 75 grand above what
yeah,
anyone else would pay. So owner occupiers have a
yeah,
specific need in the commercial market because a lot of businesses were started after the pandemic, and also a lot of businesses did flourish during the pandemic, and therefore people are looking for new spaces. So I think it's
yeah.
probably the same in the residential market. People are looking to move and change life because everyone's been sitting on their hands for the last 2 years. So I think it's equally competitive, I would say.
Yeah. Okay, thank you, thank you. So I got a question for you. Obviously, you're doing
Mm.
on a larger scale, but you know, sort of people that maybe want to start out sourcing deals. Um, what advice would you have for them in terms of how do they establish
Good
themselves?
question. What I would say, so I think everyone wants to be an entrepreneur, and I see a lot of stuff on YouTube and stuff. I started off working for someone and looking for a job because you'll get the training that you need and also the benefit of a brand that can promote you. So I would
Yeah,
strongly suggest looking for opportunities where there are jobs out there. Um, because that's a great starting place and someone that's willing to train you up. My company, they do that. So if someone was really keen, then we're the type of company where we can give anyone who's really keen on it to a start, basically. But the the thing with what I do, it's a bit of a minefield. If you're starting out, I could tell you 10 ways to find sites right now. You'll find those sites, but you won't know about right to light issues. You won't know about precedents for hire in terms of how many units you can get on there. You won't know how to do a development appraisal. You won't know how to engage with the owner and give them examples of things that you sold in the area. You won't really know what to do. You'll just know the property might be for sale. So there's a lot that goes into it, and it's not something that people could just walk into. I think the best thing to do is seek a mentor or try and get a job in it if you're really keen on it, because there's not enough content out there, which is just part and parcel of this market at the moment. That's why people like yourself are really useful because
but that's today. So let's get on to the
cool.
next question. Development appraisals. How? Okay, firstly, just explain what a
So
development
development
appraisal
appraisal
is.
when you see an opportunity to develop some land, what do you think you can get on there? So if it hasn't got any planning consent on there, you're trying to work out how many flats or houses or commercial buildings you can get on there. Once you've worked out what you can do on there, then you run the residual land appraisal, which is working out what the land is worth once you've got that planning permission, or before you got the planning permission.
And then in that, effectively, I guess, what do you tend to just use sort of standardized metrics for price per sort of square meter for your build costs? And in the current market, what are you using? What figures are you using? Because they've changed a lot over the last couple of
we
years.
used to use £200 a square foot as an average, because obviously we're not buying the site, so you work out in between. So people were building for £180 per square foot, and then people were building for 220. So if you're around 200, you're safe. Build costs have gone up, so we will play around with numbers around 225 to 250. But it depends on the scheme. If you're building a massive tower, then your build costs are going to be significantly more. If you're building anything over 5 stories, it's going to be more. If you're doing a permitted development scheme, like what we were talking about before, it's completely different because there's less that goes into the build. So you've got to have your pulse on the market.
Okay, and so you think, so you have your sort of baseline numbers, but you'll tweak them based on the type, based on you doing your development appraisal, looking at what type of actual development you could potentially get on the site, and then taking some sort of real ballpark figures, but enough to be able to give an idea of where you can market the site approximately.
That's it.
Nice. And you think a lot of that experience, you said that came from you working for another company and going through the process, going out, you know, to do, you know, to doing your valuation.
How I started out, we would look for opportunities ourselves. So I would have to drive around looking for opportunities, noting down the addresses, and then working out how to approach these addresses. So the things that I'll be looking for are derelict buildings. I'll be looking for, let's say everything on that road is 1 story, and everything on the road is 5 stories, and then there's something on there's a property on the road that's 1 story. So there's potential to go up to 5 stories, right? So just looking for opportunities, looking for MOT garages, for example. Those are great development sites, or anything along those sort of lines where it's a commercial building that could be or is in a residential area. Then we would look for it and knock on doors, do whatever we can.
Okay, so that was going to be my next question, because obviously it's great finding the, it's great knowing the potential, but what tips would you have for engaging with, assuming, let's assume that you can get in touch with the owner. What tips would you have that rapport, relationship with those owners?
It depends on who you are. If you're a broker, it's very different to if you're a developer, right? So from a developer's point of view, you got to be very careful, because everyone's going to be considering you as like the greedy developer. You two are technically enemies. You're trying to get it for as low a price as possible, and they want to sell it for as high a price as possible. So you're gonna have to try and find that medium. Me as a broker, I go there and try to befriend them, because I am technically working with them to try and achieve the best price. My job is I operate on percentages. So if I sell the site for more money, then I get paid more. So it's well in my interest to do that. So if you're a developer, you've got to be very careful how you approach it, and I'd recommend getting brokers involved, because that creates a separation. And then if you are a broker, the best thing to do is listen. A lot of people don't listen. So just listen to what their needs are, what their circumstances are, and then navigate through that to try and negotiate a deal.
I don't know. I hope you're still in the next.
Can you see me now?
Again a little bit. Yeah, you've blurred a little bit, but I think you're coming back. You're coming back into focus slowly. Oh, you're back. Yeah. Good stuff. Okay, yeah, I think that's a lot of good advice for anyone potentially looking to engage with somebody that's either got a site or think they found a site and want to reach out to them and talk to them and work out how they can potentially across the line. Now, you did touch on the fact that you are paid from the seller, and that's very nicely into a question from Mr. Pay Your Bills. They're back, and they wanted to know what kind of ROI do you aim for? Like, I don't obviously, I guess because you're working for the seller to a degree, it's just based on what they want. But is there a way in which, is there a standard percentage of profit you're aiming for that
100%. So
to achieve?
You're looking to achieve a minimum of 20% of the GDV in terms of profit. If the developers achieving that, universally, most people will be happy with that. Not everyone, some people are 30%, 25%, but 20%, a lot of people are comfortable with that, especially builders. So we look for that, but we will look at other angles at the same time.
And again, feel free, you can say no, but they ask, generally speaking, if somebody, because there might be people in here with sites that want to work with you, what's your sort of range? I guess it's not it's not going to be the same for everyone, but range of sort of fees that you guys charge to obviously provide.
Yeah, the industry standard is 2%, so we just charge 2%.
Okay.
And we don't just work for sellers; we work for people like yourself. So if I was to find you a site, you would pay me 2% for finding you that site.
Okay. I've got a couple little niche questions here, so we'll see if I got an answer to this. So Sergey has asked, have you ever had planning achieved on a grade 2 listed building?
I personally haven't gone in for planning on a grade 2 listed building.
Yeah, it's fair enough. Yeah, might have all have experience. I haven't either personally. I had a look at one that had planning in place already, but the amount of conditions and requirements, and I didn't see it. The building, they were just off, in Crystal Palace, two really semi-detached, like two semi-detached Georgian properties together. Outsides were beautiful, completely restored, Venetian plaster inside, amazing. But yeah, it's a lot of work, a lot of time. And I think a lot of the time, because those trades were really labor and skill set intensive, that you have to do it in an area where, your end values are going to match up all the hard work you've got to put in.
Definitely. I wouldn't recommend grade 2 listed buildings if you haven't got the experience.
Yeah. What am I looking at? What's this? Random question again. Where I was receiving direct to vendor for my site, they all said the developer pays their charges. Why do your sellers pay?
So why don't the sellers pay? Is that what they said? Is that the last bit of the question? I can't see it. Oh yeah.
They're saying when they were receiving direct to vendor letters, they were saying they would pay for all of their fees. But in your instance, that obviously the seller pays. Yeah. But I think because you're providing a service for both parties to maximize and make sure you get the most amount of money for that said vendor, as opposed to dealing directly with the vendor, who, because it hasn't gone to the market. Yeah.
So the way I operate, I work on a traditional agency basis where a vendor can come to me and say, I want to sell this development site and I want to get maximum exposure to the market. In me doing that, I'm able to create a competitive bid situation to drive the price up. Now, if I'm acquiring a site off market, which what this guy's referring to, where someone's approached you and said, look, I've got a retained client, they're going to pay my fees, and they want to buy your site, that's completely different. I do a lot of deals that way, but with that means I'm working for them. So I'm trying to get it for as lower price as possible for them.
Yeah. Okay, no, makes sense. Makes sense, makes sense. Well, I hope the ordinary landlords, hope that helped.
Cool.
Apologies. Now I have any further questions for you? We definitely need to get
Yeah,
you on
let's
the
do it.
podcast at some point. You've seen, we've had Io, obviously kind of complete the trifecta with you
It'll
now.
be good. It'll be good.
Before I let you go, I want to know what deals have you got at the moment? Because you've got like 38, 40 people here at the moment. Maybe someone looking for deals. What do you currently have available? You know,
Yeah.
different people
So
looking for projects.
I've got a nice, interesting one. Ground floor commercial with two flats above, and then it's a freehold building
Mhm.
in Crown Point, so which is in between Streatham,
Okay.
West Norwood, and Crystal Palace. So that's a nice little site. It's completely off market at the moment. The vendors are looking for 700k. So you're basically getting two flats, two studio flats, a ground floor commercial which is around 1,000 square foot, then another commercial unit which is 522 square feet, and then there's potential to go up another story. So you're getting quite a lot of property in a nice location for 700k. The other property I've got is in Braintree, which is a ground floor commercial with two flats above. It's currently generating, I think, £54,000 per annum, and we're selling it for just over 700. So a nice 7% yield if you're looking for an investment, and it's got a decent tenant on the ground floor. So those are the two that I've launched recently, and then I've got an industrial building. But if you're into industrial, get in touch about that as well.
Nice, nice, nice. Well, if we appreciate coming on today, talk to us about sort of difficult market. As I mentioned earlier, if you are interested in getting involved, reach out to
Appreciate it.
Nathan directly, whether that be for a deal or potentially further insight into the industry. So we'd be happy to kind of shed some of the knowledge that you've. Because how long have you been doing this
I've
for
been
now?
doing development specifically just over 3.5 years. Yeah,
Exactly. So I picked up a lot of
it
knowledge
doesn't.
over that time. Um, anything else? Someone's listening to this. Where else outside of the Instagram? Where can
Yeah,
you
find
find you?
me. So feel free to look at our deals on at cityandcounties.com. That's the commercial agency that the brand I operate under. Feel free to contact me directly on Instagram. Follow me on LinkedIn as well. A lot of my deals are posted on LinkedIn rather than Instagram. Um, so Nathan King, follow me on Instagram, and then you'll see a lot more there. But if you're interested in getting more into it, then I'm more than happy to help people as long as you're keen, because it's not what I do is not easy.
I hear you, my brother. Well, enjoy the
You
rest of your
too.
shoot.
Nice.